but I only know what I know, and I can only do whatever, I can only tell you guys whatever I do. So, um, the best thing to do right now is size down. I mean, it's not like I've had any like big trades recently. It's been pretty slow. Um, but the best thing to do is not try to go for home runs. It's just, trade less, trade smaller size. Don't get blown up. There's no reason to blow, half your account or almost your entire account, just catching a few bad trades in a row, and then you try to go get it all back as quick as you can. It's just not going to work that way. If you got, punched in the face a little bit the last week or two, own it. And just know in the back of your head, there's nothing you can do about those trades. They're over with. And remember this for the next time it happens, and just try to stop the bleeding as quick as you can. So it's just kind of, it is what it is. I think there was other trades elsewhere. Those are, some like the oil trades and defense stocks. I mean, they're tradable with options. They're just a little bit harder because I trade options on the stocks I trade because they're very liquid and they typically move pretty decent ranges throughout the day. But when you have a move like Lockheed Martin or Raytheon or oil ripping, those are stocks that don't move very often. So their IV goes through the roof. The contracts get really expensive and they move clunky. That brings volume down and stuff like that. And Chag, yeah. So I'm going to get into that for sure. I think I missed something up here. SMCI. I'll get into SMCI for sure. Jelly's juice. What? So I'm using Charles Schwab Think or Swim for my charts. What you're looking at right now. I used to buy and sell on this, but I've used this for about 6 years, so I know it really well. I always recommend it to anyone new. It's free. You just got to set up an account, and it's great. To me, it's the best charting software there is. I buy and sell on a different brokerage, a different software, and their charts are awful. And I actually pay about 115-ish like dollars a month for them. And I hate their charts. And I don't think I'm ever going to switch from this, unless I have to, right? Unless I'm forced to, depending on, whatever happens in the future. But okay, so a topic that I want to get into tonight, and Chag has brought it up, is doing a deep dive on IV and Delta, how it impacts the return we get, and what to look for when picking the strike price in accordance to those. So before I get into any of that, I want to go over what IV and what Delta is. So what's IV? I talked about this a little bit earlier on my earnings stream. So if you've already heard this little spiel, I'm sorry, but I'm going to do it again. So IV stands for implied volatility. And I think we all know what implied volatility is. Implied volatility is, I think you know what volatility means, right? Just crazy movement, right? Up, down, big moves, whatever it is, right? So implied volatility basically just means, the percent of implied move that the options dealers are pricing in on these contracts. Okay, they're implying volatility on this. What is the chance that there's high volatility on specific contracts? So when are times where IV will go up? Well, let's think. When are times where stocks typically have really big moves? Well, one very easy example is going to be during earnings. Okay. So during earnings, right, typically you're going to see a stock move way up, way down, maybe not go anywhere, but there's an implied move. There's something may happen. Okay. So if I am a options dealer, and let's say I have, 100,000 contracts that I can sell, and I know that Tesla's going to have a really big move, why would I be okay with selling you something for a very, very cheap price when I know that it can move, a ton? Well, I wouldn't, right? So that's why they bump up the price of options, because they want it to be more expensive for people. If you want to buy this and you want to get into this trade, you got to pay more for it, because the stock, is going to move one way or another pretty big. Okay. So that's why they bump up IV. When they do that, so, a stock can't, or an option can't go from $100 a contract to, $10,000 a contract. Okay. Could it happen? Of course it could, but the chances are obviously very low. So if you want to get into that same contract around earnings time, that's why they bump it up in price. So you have to pay more to get into it. It's like buying, anything that's more expensive, right? There's more value to those contracts. So why wouldn't I sell it to you for more money? There's more demand there, right? So that kind of sums up IV. I like to teach it as like a balloon. So when earnings come around, they inflate the balloon, they inflate the price of things. When something like the robo taxi event we have on Tesla, and we also delivery numbers last week, those are news events, right? Those are stock events that are planned and they are coming out. So IV is going to get inflated because they're implying a big move up or down. And we saw a big down move on Tesla, right? So they're implying a bigger move. Whenever something is unexpected and it happens, that's when you can get into the contracts really cheap. And then IV goes through the roof and your contract's going to gain value no matter what. If you can get ahead of the IV, okay? Because you got in before that balloon inflated. Okay. So that's another reason why, like, whenever I see really big breakouts, setting up, whether it's like that one Tesla trade we had a while back, we got in before that balloon inflated. So we got in, not only did the stock break out and really make a good move higher, IV started pumping up, that balloon started inflating, and the contract prices went up along with them going up because it was going in our favor, along with Delta going higher in our favor, which I'm about to get into. So it was just like a triple action move there, where we just the premiums just totally went bonkers, right? Okay, so if there's any question IV, ask away. But I'm going to go into Delta now. So Delta is one of the Greeks in options, okay? And for y'all that are in my coach's corner, I just did an options 101 lesson where I go over all of the Greeks. So there's the three that you need to pay attention to are going to be Delta, Theta, and Gamma. I'm not really going to go into the other ones besides Delta here, but just a quick one here. Theta is think of time decay when you hear theta. So it's how much your contract is going to lose value over time. Gamma is what changes Delta. Okay. So I'm just going to go into Delta, but if there's questions on the other ones, I'm happy to answer them. YouTube, Twitter, you guys can ask as well. So Delta is how much the contract is going to go up in value per $1 move the stock is going to per $1 move that the stock makes. So if I buy a Tesla 250 call tomorrow and the delta is 0.50, that means that contract is going to go up 50 cents per $1 that the stock moves, or $50, right? 50 cents means really $50. So if I buy one and it goes up $1, I'm going to gain 50 cents. So that contract is going to go from $250 to $300. Okay. But then the delta may change from 0.50 to 0.55. So my contract went from 250 to 300. And on the next dollar move, it's going to go to 355. And let's say that so then the delta changes to 0.60. So the next one, it's going to go from 355 to 400 and what? 405? Or I think that's the math on it, right? 415, is that it? So it's going to go to 415, and then maybe it goes to 0.70, and then 0.80, then 0.90, whatever. It can start going up by 5 to 10 to 15 to 20 per $1 move, depending on if you're in the money or out of the money. So that's what delta is. But it's it's the same on the way down. But when a stock or when an option is going in your favor, right? So you're making money on it, delta goes up. Okay, because the contract price is getting higher. If you buy a call and the price and the stock price goes down, delta will go down as well. So it may go from 0.50 to 0.45 to 0.35. So every dollar you're going to be losing less money, dollar amount wise, but the contract is getting cheaper and cheaper. So that's why delta is coming lower and lower. Okay, because it's still a percentage of the option contract. So let me go back to your question here. And how it impacts the return we get and to look for when picking the strike price in accordance with those. So to me, I don't necessarily ever pick a contract, a specific strike price for a day trade based on IV or delta. When IV comes into play for me, I know that these contracts are going to be more expensive, so I can't buy as many as I would. And I also have to understand that they're going to move in bigger chunks. So if I buy a $300 contract, they may move by, 5 cents per tick up or down, right? So it goes from like 305 to 310, 315, whatever. If I buy $1,000 contract, they're going to move by like 50 cents. So they're going to move by $50 every tick up or down, or maybe 10 or 20, or whatever it is, whatever the delta is. So that's when I'll pay attention to IV, because I know the contracts are more expensive. So to kind of wrap that up, if I'm ever picking a strike price, it's very simple the way that I pick it. It's simply just going to be whatever is out of the money, the closest out of the money with the highest volume or open interest. So today, NVDA was at 130. Could I have bought the 130 calls and they would have worked totally fine? 100%. But I bought the 131 calls because they had the most open interest, and they were, $1 out of the money. So they'd be a little bit cheaper than the 130s as well. So I may be able to buy a couple more contracts. This thing moves. I can pick up an extra couple cents per contract on the extra ones that I can buy. So that's why I did that. Would you say they would be more important on swings or leaps than day trades? Yeah, I mean, so definitely more important. Again, I don't really pay attention to delta much. The only time that you would ever really want to pay attention to delta, in my mind, is when you're trying to calculate how much you can be up or down. And there's software for that. You can go to Options Profit Calculator, the website, and you can actually see how much you're going to be up or down, because it's going to calculate everything for you. But so, yeah, I mean, I honestly wouldn't really focus on delta at all unless you're just trying to calculate how much you're going to be up or down. IV, for example, I don't know that, if you go for leap trades, IV isn't really going to be a big factor, simply because you have so much time until expiration that IV shouldn't be super high, because the contracts aren't going to move a ton. Unless you get that really big move over a couple months or whatever you're looking for. So that's, to me, IV doesn't really matter then. When I pay attention to IV, yeah, definitely that too, Duco. But I wouldn't pay attention. The only time that I consider IV is, if IV is really high, I need to know these contracts aren't really going to work that well. And I may not even trade it. And a lot of the times when IV is up, it's because of earnings, and I'm not going to trade something when they have earnings in a day or two, just because I know the contract's going to be really expensive. The stock may move kind of choppy. No one really wants to pick a direction, stuff like that. For swing trades, I mean, again, like I'm never basing what I'm buying specifically off of IV. It really is the only time that IV plays a factor for me is if I'm going to buy something or not. So if you're looking to get into a swing trade and it's like the day before earnings, but you don't really care, you want to hold it for, a couple days or whatever, you don't really want to be buying a week or two out, because the IV is still going to be high on those. And after earnings, the IV is going to come down and you're going to lose value on those. Yeah, Latvian, that's perfect. If you buy a contract with 100% IV and then it drops to 50%, you've already lost 50% of the value if the stock literally didn't go anywhere, but the IV dropped. So another thing to, sorry, one sec. One more thing about IV, which I think that most of you probably don't know. So this is why I like playing the downside more. Okay. To me, I can read the downside a little bit better, but right now we're just not in a bearish environment. So I haven't had many downside trades. During the bear market last year, I had a bunch of downside trades and it was great. However, the reason that I like playing the downside more is because when the market is falling, especially when it's falling quickly and stocks are selling off quickly, the VIX goes up. Okay. VIX, that's the volatility index. When VIX goes up, contract IV goes up, and the contracts gain value if they're going in your favor. So you kind of get a little extra on the premiums. They're going to inflate in value, even though the stock necessarily isn't doing anything crazy, but the market is selling off and VIX is going up. So the IV is going up. So that balloon is inflating, right? The premiums are gaining value. So you're, getting a little extra bump on your premiums as they're going in your favor. So you can make some pretty good money on the downside when you can get some clean plays. So I don't know how many of y'all knew that, or if I hope I explained that well. But that's a big reason why I do like playing the downside. It's just it's kind of rare right now for me to get a downside trade. Chad, does all that make sense? Yeah, Duco, 100%. Right. So just like Duco is saying, I mean, I typically never sell options, but that's a pretty easy trade to do. If you get a big move on, to the downside, or whatever it is, a big move in general, and the contracts are really pumped up from IV, well, that balloon's gonna deflate, right, at one point, because the implied move is over. So people come in and sell the contracts. That's why I tell you guys, after earnings, if I'm looking to play something like the day after, the day after earnings, I have to wait for a couple minutes off the open to let those premiums die down. Because if you buy off the open, that balloon's deflating. So you're buying something that's going to lose value no matter what. So it's even harder for you to make money if the stock is going in your favor. IV is tied to the expiration date of the contract. Not necessarily. I mean, kind of, but not necessarily. So I mean, obviously, if Tesla has the delivery numbers tomorrow, this week expiration contracts are going to be, the IV is going to be more than next week's, and it's going to be more than the week after that, and the week after that. So I mean, in a way, sure, but in general, just think of implying that there's going to be a big move, and that's when the balloon's going to inflate. So semi-connected, Chag, but not super connected. So really good question. That was good. Does anyone else have questions on any of that? Does that make sense to you new guys? Jelly Juice, do you have questions on that? You're all good? Okay, I hope that made sense. It's important stuff. Yeah, options is a world in itself for sure. It's just gonna take time, but try to write this stuff down, Jelly. It's gonna take many lessons. Um, let's see over here. Row Exotic on YouTube. When is the best time to start trading? Is the idea to wait 5, 10, 15 minutes, or does it matter? So I'm guessing you're talking about after an earnings play. That's what I was mentioning when I say I want to wait 5 to 10 minutes after the market open, on a post earnings day. And what do I mean by that? So let's say that market closed today, right? That today's a Tuesday, and Tesla had earnings tonight. Okay, so after market closed today, Tesla had earnings. So tomorrow morning, okay, so Wednesday morning, if Tesla had earnings the night before and I wanted to trade it tomorrow morning, I have to wait. Ideally, I want to wait like 10 to 15 minutes. So I know that the IV has come down. But if I need to get into a trade as quick as I can, I'm still going to at least wait 5 minutes, ideally 10. But honestly, the more you wait, the better. And that's a big reason why, if you have the capital, and when I got to trade at the trading firm and I had access to actual capital to trade shares, there's no IV in shares. So people that can trade equities, they don't care. But for us who have to trade options, we have to consider stuff like that, because it just makes it harder on us. So for options traders, you got to wait. But again, that's why I wanted to mention equities, because if you are going to trade equities, you can buy the first second of the day and it doesn't matter, because it's all just price. Yeah, no, Jelly Juice, that's fine. I do demonstrations and stuff like that. You're premium now, so you're going to get more premium lessons and stuff like that. What else you guys got for me? Is there something going on tonight? It's pretty light in Discord. Typically, there's like at least 30 in here. Very light. Yeah, that's true. That could be true. Let me make a little announcement here in the free chat. See if anyone's around here. This is like extremely light here. Well, if it stays pretty small, then again, we don't have to stay here for the whole hour, but I want to try to stay here as long as y'all want me to. Does it matter as much on a normal day when there's no earnings? So row exotic, no, that won't matter. I don't pay attention to IV if IV is not up in the air. And typically, like I was talking about earlier, IV is only up when there's earnings or some really big news that's coming out or something like that. So on a normal day when there's really no news on the specific stock and the IV isn't way up in the air, then I never consider it. All right, Duco. So yeah, man, that hurricane coming to Florida looks pretty crazy. Here we go. We got some more people in here. What's up, everybody? Let's see. Some people don't know how to join the voice chat. Let's see here. What's up, Nicole? How are you? There we go. See, I knew it was kind of light in here. Now we're getting up to our normal numbers. How we doing, everyone? You guys just missed a whole spiel on IV and Delta and options. I was going off. How we doing? How do you see support and resistance on Thinkorswim? So it doesn't it's not related to Thinkorswim, right? I mean, support and resistance is simply just charts in general, right? But to keep it very simple, see, I have a ton of lines on here. Let's do something like Apple, maybe. So like support and resistance on Apple, you could see that this like 215 level here. You can see a little bit of resistance here. We bounced off it here. We bounced off it here. Here, I'll do some circles so you guys can see it better on there. So, we can see it kind of came in close over here. We got another bounce right here. So that's why I have this line at 215. You can kind of see 220 got bounced off of over here. We broke through it right there. We had some rejections here at 220. You could even consider some rejections here at 220. We came down close to 220 here and bounced like 220. That would be a support or resistance. So Prashan, I know that's kind of bland, but that's a very simple way of looking at it. If I go on an even bigger time frame here on Apple, like a 5-year, you can see a pretty solid resistance right here at 180. All right, so we bounced off twice there. We got close right here, broke through here. We also have another one at 200. Okay, broke through it right here. Does all that make sense? All good, Roland. Cool. So I mean, support and resistance is typically just where you're seeing price bounce off of or reject off of multiple times. That'll show you that that's an area of interest for reversal. And for me, as a breakout trader, I like to see the break of a support or resistance because then typically there's a pretty solid move after that. Yeah, we do. you go over tapping a wall? Yeah. So we kind of saw it today on the video, if I remember correctly. Man, this chart's starting to look good. This thing's breaking out. I think we're gonna get some good trades on this. So today we saw, let's see, where was it? It was at 132, I think, right? No, maybe 131. Yeah, so it was actually at 131 because this is where I was trading it. So let me try to take some of these lines off here so it looks a little bit easier. I'll put a little line there so you guys can see that as well. So looking at NVIDIA here, so tapping a wall. So NVIDIA actually didn't even tap this wall pretty much because what it did was I said, okay, there's a big wall at 131. This thing popped up and it hit 130 and 99 cents. So it actually never even hit the wall. So it got really close to it. So, I kind of said it tapped it. And sometimes even, let's say there's like a 500,000 wall sitting there or whatever, Latvian, okay? And NVIDIA comes up and it hits 131 and 250,000 orders got taken out, but there's still another 250,000 there and then it falls back. You can consider that tapping the wall as well. So, it kind of comes up, just hits that wall. Not all the orders get executed. And then it comes back, comes off that wall. And then it has to get back up there to break it again. So that's what I meant by tapping the wall. A lot of times that's kind of why you'll see it hit 99 cents and then no one's willing to execute at 131. And then, it fell down pretty quickly there. So that was a bigger reason for that to happen today. But sure enough, later on, comes back up, breaks through, pulls back, makes a new high, sat right under it. Look, so right here we have another one here at 132. Came up, we hit 132 on this candle, didn't break the wall, fell back in, got back up, hit it again, then boom, broke through. That's a beautiful little breakout trade right there. Yeah, Roland, me too. I mean, I think that this is going to keep going further, but there's just not much easy continuation. You got to hold through decent pullbacks, like, bigger pullbacks than I want. So either I'm going to buy in smaller and just really look for a big run, or I'm just going to take the scalps and get out and then buy in on another dip and then take a scalp, get out, and just do it over and over and over again. I don't know. I hate over trading, especially that way, because all it takes is it to pull back, you buy some, pullbacks more, buy some more, pullbacks even more, you buy more, and then it rips through low a day and you're in with, more than you should. You're down 40%, you take a big loss and you like lose, all that you've scalped. So yeah, no, I mean, Roland, me too. That's why I was just like, you know what? I think I'm just going to start signaling sells like really quickly and I'm going to just sell 80% of my position on the first move. Maybe I'm going to miss out on money, but I'm also, I'm tired of trying to hold for my targets and, I get caught in pullbacks and then, I don't make as much. Maybe I break even, maybe I even lose a little bit of money. And then I have to, then I wait. And then by the end of the day, it's way up there. So take my money quick. If it pulls back, it pulls back. If it goes a little bit further, whatever, wait for the pullback, try to trade it again. That may just be the safer thing to do. But again, I hate, rapid fire trading. I'm trying to take solid trades and we're just not getting follow through right now because there's just not that much volume. There's just no volume right now in the market and it's making things really choppy and hard to trade. Yeah, it just takes a lot more time, which just sucks. I mean, it's really tough, especially for options traders. So honestly, it makes me think I need to just be in and out as quick as possible. someone new to trading, where are some of the best places to learn the basics? Well, I think you're here. I mean, obviously you can go, I mean, I'm not going to like lie to you. I mean, you could go to YouTube and like look up random stuff. That's kind of how I started. I also started to, joining a lot of different chat rooms or whatnot. But now that I'm past that stage, I would say, the best thing you could do is try not to do too much at once. Just try to learn, like you said, the basics. Don't try to trade 10 different ways the first time. Try one, give it a little bit of time. If you don't like it, try another. Bomb I would say, like, first off, evaluate what kind of trading style you're looking for. Do you want to day trade? Do you have time to trade the opening hour of the market, 5 days a week? If not, maybe you look to swing trade where you can buy something, hold it for a couple days. Typically that's what, most people do if they have, full-time jobs. Other things is like you could just be here because we have it all. We have, from me, the day trading guy to swing trading to, we have some crypto stuff. We have some investment stuff. And we pretty much have education for whatever you need. You just kind of need to help point us in the right direction on where to put you. And then that's where you can start going through our classes, and you can get in the coaching program, and you can deal with a specific coach where you're going to get specific lessons on that specific strategy. You're going to get access to all those educational videos. There's a ton of free stuff here that you can already go watch. But, I would say paper trade, make sure to get a good brokerage, and just be prepared to put some work in. This isn't something you're going to pick up in a couple days or a week or a month. It's going to take a little while, but every single day you're going to get better, but it's going to have to do with how much time you put in. Netflix is fine today. How chart looks like for tomorrow? Pullback possible tomorrow? Yeah, I mean, I think it could pull back. I don't know. I'm not going to be looking to trade the downside on it by any means because it's been pretty strong today. We're up near all-time highs. It is something I'm going to look at in the morning. I've been meaning to catch one of these all-time high trades on it, but it's just been hard. And honestly, with the way the entire market's been trading, I'm not that thrilled with trying to trade it. It's a really hard stock to trade with options. You could trade shares on it, but it's really expensive. So I would just be careful. Again, with the way the market's trading, I'm not a big fan. If the market was trading better, I'd pay more attention to it. I will look at it tomorrow. It may be a consideration tomorrow, but I would only be looking for the upside. I wouldn't really be trying to play the downside on Netflix, just to keep you safe. I was noticing more buying power than selling power on SPY this morning. To determine a trade. I mean, I love that you're looking for buying and selling pressure for sure. I mean, yeah, you want to look at volume, fire away. You want to look at candlestick patterns if you can. You want to look at, maybe times and sales. There's a lot more. I'm a little lost on your question. Look at to determine a trade. I mean, my biggest factors are, is there volume? Is there a specific level that it piques my interest, right? Is there a good resistance, a good support? Is it in an uptrend? Is it in a downtrend? Stuff like that. But I would say volume is definitely key. If there's no volume, there's no trade, because if there's no volume, then there's not a ton of transactions going through. There's not a lot of other traders looking at this. There's not a lot of money on your side, right? So scalp options are open and close quickly, but swing options is a day or few later. Latvian. Yeah. So, I mean, like scalping and day trading are kind of the same thing. Like when people say scalping, that kind of means like you're buying and selling like, fairly quickly, like under, 5-10 minutes, I would say. Day trading is kind of where you hold for like, 30 minutes, maybe an hour, maybe a few hours, and then sell. But yeah, so that's all in the same day. Swing trading is when you hold for more than one day. So yeah, you can hold for a day, a few days, a month 2 months, 6 months, whatever. Typically anything. So it's like day trading, swing trading, investing kind of thing, longer term trading. So, maybe you hold things for a few years, maybe a couple months, maybe a couple weeks, maybe a couple days, or maybe a couple minutes. So typically a leap is like a year out, at least, like maybe 8 months, I would say. I don't know that there's any specific time frame on leaps, but typically when you buy leaps, you buy like next year contracts. SMCI pullback entry or not, or wait till 40. I lost a lot of money for not being patient. Not anymore. Yeah. So Peter on Twitter, SMCI has been going kind of crazy, but it sold off hard. I would say that right here at this $44 level, I mean, you're at a pretty decent support. Buying into this and then maybe seeing if it trickles back up kind of makes sense to me. But your risk is very defined, right? You buy in at around 44, 45, your stop loss is maybe like 43. So you're risking $1, maybe looking for a 5-ish, maybe $10 move if you get lucky, something like that. Very good RR. Any other questions, guys? Got about 20 minutes left. I've seen a couple traders mention a stock is internal bar strength. Internal bar strength play. What is that? I've never heard of that. I've heard of an inside bar day, but I've never heard of internal bar strength. If you're looking at, I think maybe what you're talking about is going to be something like what this strat talks about bars. Yeah, I mean, I understand like bars is candles, right? So like a bar is a candle, but I think you may be talking about like I'm looking up a picture to send in the chat here. So like maybe something like, let's see. Maybe like that. Like the strength of a bar. An inside bar though, since I'm mentioning it, is something like this. So you can find an inside bar here. Like I don't know, like here in the video, I don't know if you guys can see that, but like this daily candle was up and down inside the previous day's bar. That would be an inside bar. I don't know. I'm sorry. I've just never heard of internal bar strength play. I don't know what that is. Yeah. And I don't know a whole lot about the strat thing in Florida. But Well, you guys have any other questions? Still got about 15 minutes here. What do you think about text with the robo taxi? So honestly, I don't really know what's going to come out with this stuff. I do think that I'm surprised that the stock isn't up today or the day before. I do think there was a lot of people that were trying to be long into delivery numbers, and then you get the bump on that, meaning that they were buying in before the delivery numbers came out last week, thinking they were going to be up and the stock would be up, so they'd be in a nice profit cushion. They could take some profits and then hold for this robo taxi event. But numbers came out bad, stock fell. A lot of people probably got ran over, so they sold. So there's people still just kind of getting out of that position. But that event's in 2 days. So I'd be looking for Tesla to go up the next 2 days, but honestly, I just really don't know. The way it acted today makes me think that it may just sit flat and wait for that to come out. But honestly, I don't know, Roland. To me, it's like this is how I think we should probably be thinking now. If there's some momentum up into this the next 2 days, great, we can trade it. If not, we just sit back, wait for it. After the robo taxi event, the stock's going to go up or down. Ideally, it goes up because that's where the better trades are going to be. But if it goes up, great, we can day trade it, and there's going to be action on it. There's going to be some trades there probably. We can make money there. So why try to buy in before it? To try to I mean, in Roland, it could easily do that. If it's not that exciting, like people are thinking, it could just sell off, even more. So there's just so many scenarios, and it's like, let's just wait for the event and then try to make a trade idea on it. Why predict? Why try to pick a top or bottom? We don't really know what's going to come out. Obviously, it's Tesla. People are going to have high expectations. If they don't meet those and if they don't exceed those, the stock may fall regardless, even if they came out with some good stuff. Let me see what this is here. Internal bar strength indicator. Never heard of that, but let's put it on here. Internal. They don't even have it on internal bar strength, IBS. Bar strength, internal. They don't even have it on Thinkorswim. I've never heard of this. It's a lot. It's on TradingView. Let me look it up here. Internal bar strength indicator. I'm going on Google here. I know you guys can't see it. It looks kind of like IBS. It looks like RSI to me. Besides 30 I think it's 30 and 70, or 20 and 70. It's 60 and 40. So it's kind of like when things are consolidating, I guess. It's showing when things are consolidating. Kind of makes sense to me. Huh. Oh, maybe that's another one. That's interesting. So it's just kind of showing you what an inside bar is, or where there's an inside bar. I don't know. It's interesting. Never heard of that. Not to make fun of it or talk trash on it, but from being on a professional trading floor, I've never seen anyone use that. But if it works for you, it works for you. If you can make money with the inside bar indicator, then freaking make your money. It's Bitcoin chart. That's cool. Huh. A Discord that calls out IBS plays, but they don't explain it. That's a little shady to me. But I don't know. Maybe I just don't know what it is. Maybe some other analysts here know what it is. Maybe I'm getting schooled. I'm glad you brought it up. Oh, you found it, Common Man? What's it called? Oh, yeah, that's MACD. Wait. What's it called on there? So I don't know. Maybe they buy or sell an inside or internal bar strength. So if it's a weak internal bar, maybe they go short. If it's a strong internal bar, that they go long. That may be the trade. I don't know. I don't know. I've never seen that used by guys who do this for a living. But if it works, it works. What are important candlestick patterns that come up often that I can look out for? So I have a full lesson on that, Jelly Juice. I don't know if you watched my lesson earlier today that I pinged you in, but let me go over it here. I actually can ping you in it as well. Copy message link. I just pinged you in the Ethan corner. But some easy ones to look for are going to be like bull flag and bear flag patterns, and then wedge patterns. But I did a whole lesson on those. So I would rather you go and watch that video from me, because I deeply explain it, and we don't have a whole lot more time here. Yeah, no, all good. I did a full lesson on that stuff. So again, it's really in depth. So I'd rather you watch it there. But yeah, so when you have time, just go through some of those videos, and there's a bunch of information there. Were the videos so Credentus? They're premium videos. They're only for people that have premium or in the coaches corner with me. So they're actually only my coaching corner videos. So you either get premium or you just get coaching alone, and then you have access to them. So if that's something that you're interested in, I can give you the link and you can sign up for premium. Be happy to walk you through that stuff. I can set you up with our kind of like our HR lady, and she can walk you through the chat and stuff like that when you get set up as well. But Jelly Juice, you see his name's a little bit more green. He's a premium member, and he's in my coaching corner. Yeah, there's free stuff there as well. That's just kind of one of my like in-depth lessons. Like this one is free, right? So it's obviously I just kind of do a Q&A, but on my premium lessons and, the other coaches' premium lessons, it's where they like really, really go in depth into specific topics. Can't give it all away for free, but yeah. So Creditas, just add me as a friend or I'll add you real quick. Whenever you are ready to switch, just accept my friend request that I just sent you, and then just DM me, and I'll get you set up. I'll get you the link and all that stuff, just so they can keep track that you came through me. Sound good? Any other questions, guys? We got about 5 minutes here. I'm going to be watching NVDA, Tesla, maybe some Meta tomorrow, and maybe AMD as well. But I'll send out some sort of watch list in the morning. So I do live trading. So since you're premium, I do live trading 4 times a week for you. So I do a premium live trading streams Monday and Friday, and I do free live trading streams Tuesday and Thursday, and then Wednesdays I don't do anything. I also have my free lesson tonight on Tuesdays, and then I have a premium lesson on Thursday nights, Jelly. So you'll get four live tradings a week, and then there's going to be another live trading on Wednesday mornings with a different analyst. So you can join in on that. But I do day trading Monday, Tuesday, Thursday, and Friday mornings. Any more questions? Typically about an hour. Some days I have to leave a little bit earlier, but most of the action happens in the first 30 minutes. But typically it's about an hour. Sometimes I'm there for an hour and a half. It just kind of depends on the day. Yeah, Chag, of course, man, of course. If you need more on that, I'm happy to keep going. That was the question of the night. All right, well, we can wrap things up if you guys are done. If not, ask away. But we're hitting that hour mark here pretty soon. So thanks you guys for coming. I'm always around if you need me. Just at me in the chats or DM me, add me as a friend, whatever you need to do. And I'll be here for you. Of course, Stickman. Yeah, thank you guys. All right. Good night. And y'all get some sleep. And I'll be in the chats tomorrow, but live trading again on Thursday. So I'll see you then. Later.